Focus and talk about an earnings candidate and Titan, the Nifty 50 stalwart, has come out with its numbers post-market yesterday. Overall seems like a good set of numbers with a beat on revenue, a slight miss on PAT and margin, but inline EBITDA numbers coming in. The jewelry business continues to be strong. They've come in that guidance range of 11.1%, so anywhere between 11 and 11.5% was the guidance, and that's what's happened. Watches eye care slightly soft, but emerging business is doing well. We have with us Mr. C.K. Venkataraman, the MD at Titan, joining us. And so, good morning. Thank you so much for your time. Really appreciate you joining us today. And let's talk about your Q2 numbers, sir. Despite a strong 25% year-on-year revenue growth, your PAT and margins have slightly missed the street estimates despite having a favorable base quarter. If you could help us understand what were the key factors behind this slight softness on your PAT front?
Hi, morning to all of you. Our focus has always been, growth and improving market share, increasing our competitive advantage, and delivering exceptional shareholder returns in the medium and long term. And we are playing to that approach and process, and we are very satisfied with the Q2 performance. Overall, the competitive intensity in the jewelry industry is very strong. And given the kind of price levels of gold, to get customers to be interested and come to the stores continues to be a thing that we are focusing on. And to that extent, if, gross margins have to give in a little in the short term, they give in. So that's the only backdrop to this. But from a growth point of view across the whole portfolio of jewelry brands, as well as across most of our businesses, we're pretty satisfied with Q2 results.
And since you're talking about the jewelry business, your revenue has grown 19% over there. EBIT has also been very healthy. If you could help us understand how much of this has been value-led versus volume-led, given the kind of surge in gold prices we've seen?
It has been substantially, virtually, value-led, because today a single bangle, which weighs just 8 grams, costs about 1 lakh, and therefore there is tremendous pressure in the middle class segments, I guess, from buying jewelry, and therefore, but at the same time, there's a large opportunity for share of wallet, for unlocking the locker in the upper middle and the well-to-do segments. And we have done that also, in the last few months. So the growth has come through value rather more than from customers of volume.
Value-led growth this time around, but if you could help us understand the change in your product mix, given gold coins and studded jewelry, both have done very well this time around. How is that influencing overall jewelry margins? And if you would like to continue to guide your jewelry margin guidance between 11 and 11.5%, or is there any change over there?
There is no change in our guidance on the margin. Now, the gold coins, given the kind of price levels of gold, naturally see a big attraction as a asset class, and you do get to see this kind of surge in customers and volumes and value in gold coins. Studded overall has tended to be better performing on the customer side, customer growth side for many quarters now, and doing better than gold, and multiple interventions that we have done has also helped in doing that. But the complication is that as the price of gold rises, the profitability of studded jewelry also comes under some kind of a challenge, because the share of the gold value in that product COGS, rises because of the price of gold, and that has its sort of cascading effect on the margin that we get from studded jewelry. So while the growth, sort of aids the overall margin of the jewelry business, but the share of gold within that sort of pulls it back a little. So it's a constant, receding goalpost kind of situation, and we have to keep running faster to stay in the same place from a gross margin point of view.
I get that. In fact, I was chatting with Ajoy Chawla as well. I think about a month back, Venkat, and he was saying that, yes, he does sense that grammages is what's going to get impacted for the jewelry business. But he also said that, I don't see gold prices going down in any much of a hurry. So eventually, consumers will make their peace with the new norm and new levels of gold. How have you actually seen the sort of consumer behavior pan out in the last 1 month of the festive season?
The festive season has been very, very satisfying to us. Pretty good. We didn't want to, and we don't want to give out any specific numbers on that, but we're very satisfied the way it has turned out. And like I was saying a little while back on the call, see, when the challenge of customer growth comes in, because because finally people are buying jewelry as an ornament, and if I cannot buy a bangle, or if I cannot buy a big enough pendant for the budget that I have, I probably stay out of the market at the moment, waiting for maybe better gold rates, down the road. So at that point in time, what do? Finally, we do have, millions of homes holding thousands of tons of gold in their locker, and the division has done a spectacular job in both raising the attractiveness of Tanishq. We had a launch of a collection called Mriganka, which has done exceptionally well. And we've also had a fabulous activation through an exchange offer fronted by Sachin Tendulkar for us. So that combination of very attractive collection on the one hand, and a very attractive and very emotionally connecting activation on the other has unlocked the locker and taken our average prices markedly up, and in a way compensated for challenges which are sitting on the customer growth side, still delivering the values and the value growth that we need to deliver. So that's the pivoting that we need to keep doing time to time when customer growths become challenging.
Brings me to CaratLane then, because that's where you've seen some strong performance, 32% there in terms of growth. International jewelry business also has doubled for you. Is that going to be the strategic way and priorities in these channels now?
Actually, the Tanishq brand is so many times either of these opportunities, and it growing at the levels at which it has grown in Q2 and what is continuing to do in the Diwali season is itself a big engine of growth in any case. Coming to the international business of Titan and Tanishq in particular, the American jewelry market is very large. The NRI, the diaspora is deeply committed to the Indian jewelry and everything that is culturally Indian, and that's what we are seeing behind the exceptional results and the expansion that we are continuing to see in North America, and Canada is yet to come, as well as in the GCC, is going to certainly drive our growth ahead of the domestic growth for a while. CaratLane, of course, is a big engine of growth. It's targeted at young women who see jewelry as an accessory much more than they see it as a store of value, who are very digitally, savvy and digitally, habituated, and they just, before they retire for the night, they probably pick up the phone, browse for a few minutes, and decide to buy something worth 30,000 or 40,000 in a jiffy. So that whole opportunity is, also very large. So yes, even as Tanishq powers its way within the what we would call the traditional, jewelry market industry, which is huge, but these two new opportunities are sort of accelerating the overall growth rate for the jewelry business of Titan.
We are all mesmerized with the kind of insight you have on women's behavior and jewelry and shopping patterns.
Venkat, if you can also take us through your eye care and the watches business, how are you looking at expanding those businesses, and is there further investments that you're going to make in them actually?
Yeah. So let me speak about the analog watch business first. It's been actually doing phenomenally over the last maybe 3 years, I would say. because of our deep belief that the analog watch is not at all a timekeeping device. It is actually an accessory which completes your look. It is an exceptional symbol of what you feel for somebody else. It also showcases, your status in life for those people who want to showcase that. And it also is, reflects the mood of the day, if I can call it. So there are multiple roles that the analog watch plays in our lives. And because of that deep belief that we have across these roles, we have invested a lot in design and product innovation, in branding and, brand visibility and retail transformation and omni-channel focus and all that. And we've steadily moved the prices up and up. And we are now, in the last watch that we launched was all the way up to 40 lakh rupees. Of course, we didn't sell in very large numbers, but even the numbers that we sold were fabulous and unheard of in our life. So the whole, the affluent and elite, households which are exploding in this country is a big driver of growth for us. And we're going to continue investing in those segments and behind these strategies to keep the analog watch going at a very healthy, double-digit growth for a while. I would say at least a decade and forever, frankly. And that is been happening for a while. It, may have been slightly slower because even the smartwatch, which is also part of the watch business, consolidated watch business, is, taking a different route as we speak. And we were focused a lot more on volume and lower prices and all in FY25, Q1 and Q2 as well. We are really changing the strategy in the smartwatches, and you will see the results of that in H2 of FY26. And that sort of, pitches the overall watch business growth down in, Q2 of FY26. But analog to analog, it is sensational. And we are selling watches at $180,000. We just launched a watch called Wandering Hours, which is priced, I think, 1.6 or 1.7 lakhs, just 500 pieces, but a lot of pieces for that price. It's really flying off the shelf. So analog watch continuing to grow exceptionally well, and I would say a minimum a decade, because beyond that, it's a little pointless to think about who knows what will happen in 2035, right? But till then, it'll power its way ahead. The watches has been totally reimagined, and I'm sure when we speak, I won't be there, but when the company speaks on the Q3 and the Q4 calls, you will see the difference. As far as eye care is concerned, up to August 2025, the growth was very good. We have reimagined the business. It is not comparable with the other big player in the industry. We operate in a combination of fashion and expertise. We are at a much higher average ticket sizes. Our customers who buy us for a combination of how well they can see and how smart they look, they sort of rave about the products that we create, the store experience that we offer. The overall profitability of our business is very good. Return on capital is also very good. We are certainly smaller than the other player in the industry, but that's not what is driving us. What is driving us is to deliver exceptional value in the segment where we play. September was a disappointing month because of GST was one reason. Industry itself took a little bit of a slowing down, but we are certainly excited about what we deliver for our customers, and we hope to improve what we deliver for our shareholders.
Mr. Venkataraman, we understand that this is your last earnings interaction with us, and help us understand, other than FMCG and Titan that you've lived and breathed for the last 30 years, what lies ahead? What comes next for you?
There are many things to do outside the corporate world, and those are the things which are, lying in wait.
Venkat, it's been a pleasure talking to you. Thank you very much for joining us today, and all the best for your future endeavors.
Thank you very much. Thank you for all the support over the years.
Thank you.
Okay, let's move.